Welcome to this explainer. We're going to dive straight into the unprecedented 2025 and 2026 AI funding explosion, and more importantly, we're going to follow all that money right down to your desk. If you've been watching the tech landscape lately, you know we're living through a massive historic shift. But today, we aren't just skimming the flashy headlines. We're unpacking the hard data, from the Stanford Human-Centered AI Index to Quantum Run's global stats and recent national budgets, to see exactly how this incredible influx of capital is shaping global power, corporate strategy, and ultimately our everyday jobs. Let's get right into it. Here is our roadmap for today. We'll start with the great AI funding boom, compare the titans and agile innovators, and watch governments enter the race. Then we'll use India's strategic AI pivot as a fascinating case study, break down the impact on productivity and the labor market, and wrap up with competing in a concentrated world. Section 1. The Great AI Funding Boom. So let's take a look at the sheer scale of what is happening right now in the private sector. Honestly, the word boom almost feels like an understatement. $581 billion. That is the global private AI investment total for 2025. It's a single-year record that absolutely blows everything else out of the water. Just to put that into perspective for you, the previous all-time record was set back in 2021 at $360 billion. We didn't just inch past that record. We smashed it by over $220 billion in a single year. Corporate AI investment, which includes private equity and mergers and acquisitions, is accelerating at a pace that's just mind-blowing. We're talking about a 130% year-over-year jump, going from $253 billion in 2024 to that staggering $581 billion in 2025. So what's acting as the rocket fuel here? Well, it's generative AI. Funding for generative AI grew more than 200% and ended up capturing nearly half of all that private AI capital. On top of that, the number of newly funded AI companies shot up by 71%, and billion-dollar funding events nearly doubled. The capital markets have essentially placed their bets. AI isn't just a cool feature anymore, it's the foundational infrastructure for the entire next decade. Section 2. Titans and Agile Innovators. Now, where exactly is all this money flowing from, and who are the heavyweights hoarding the talent? When you juxtapose the two titans, the contrast is pretty wild. The United States alone accounts for more than the global totals of previous years, widening its investment multiple over China to a massive 23x. The U.S. saw an incredible 162% year-over-year growth, hitting almost $286 billion. Now, China also grew by 33% to reach $12.4 billion in private investment. Actually, keep in mind that this figure probably understates China's true total spending because of their massive state-backed guidance funds, but still, strictly in the private market, the gap is widening rapidly. In generative AI alone, U.S. investment completely eclipsed the combined totals of China and Europe. And it's not just about the dollars, it's the sheer volume of activity. The U.S. hosts over 20,200 AI companies, which is nearly 37% of the global total. That absolutely secures its quantitative dominance. When you group the top 10 countries together, they hold 73% of all AI companies worldwide. This tells us a lot about competitive barriers and network effects. Basically, if you're located in one of these established innovation hubs, you've got a massive structural advantage right out of the gate. But volume isn't the whole story. The picture changes entirely when we measure by density, meaning the number of AI companies per million people. Here, agile innovators like Singapore, Switzerland, and the UAE take the lead. They boast these highly concentrated, intense AI environments that are just incredibly efficient. Singapore actually leads the entire world with 162.8 AI companies per million people. And this density metric is a huge deal strategically. It shows you exactly where talent, capital, and early adopter customers are packed tightly together. And that proximity, it creates faster knowledge sharing, much shorter commercialization cycles, and highly efficient ecosystems. Section 3. Governments enter the race. Private capital is moving at lightning speed, but governments definitely aren't just sitting on the sidelines. They're rapidly jumping in to secure their own strategic footing. We're seeing policy decisions drive unparalleled investments. And unlike private funding that's chasing quarterly market returns, these are massive, strategic, national-level commitments. Take the U.S. Stargate public-private partnership, coming in at a staggering $500 billion. Then there's France's historic $109 billion national AI plan, which is easily the largest pledge in Europe. And let's not forget Saudi Arabia's $100 billion Project Transcendence, utilizing sovereign wealth to directly build out infrastructure. Governments are now treating AI compute power exactly how they treat highways or power grids, as absolutely critical national infrastructure. Section 4, India's Strategic AI Pivot. To really grasp how governments are responding, let's look at India's 2026 budget as a perfect case study of strategic pivoting. In previous years, India focused a lot on just setting up new institutions. But this 2026 budget represents a major pivot toward truly mainstreaming AI. Sure, there's the 1,000 crore rupees for the India AI mission to support R&D. But what's really telling is that the government is now officially treating data centers as strategic national infrastructure. They're offering long-term tax holidays up to 2047 just to attract private capital. On top of that, they've allocated 20,000 crore rupees for a research, development, and innovation fund. And maybe the most impactful move for the long game? They established an Education to Employment Committee with the explicit mandate to embed AI directly into school curricula and teacher training. It's a fully holistic approach to building a foundational, AI-ready society. Section 5, Productivity and the Labor Market. So, governments and corporations are spending hundreds of billions of dollars. But what is this money actually doing to our workforce? This right here is the million, or I guess the trillion-dollar question. How do these massive macroeconomic trends land directly on your desk? We've talked about the astronomical numbers, but the ultimate test of this technology is how it alters the daily, tangible reality of the global labor market. Well, all that money is buying unprecedented efficiency. The Stanford AI Index noted that organizational AI adoption hit 88% in 2025, and that adoption is yielding massive returns. We're seeing a 54% jump in consumer surplus, which is basically the extra value everyday users get for free, reaching $172 billion in the US alone. Inside the workplace, we're seeing up to a 50% boost in output for highly structured, measurable work like marketing. Software development is seeing a 26% gain, and customer support is up around 14 to 15%. When the output is easy to measure, generative AI acts as a massive force multiplier for productivity. But hey, here's the harsh reality check. While productivity is soaring, AI adoption is a serious double-edged sword, and it's causing sharp tremors in the labor market, especially for younger workers. Think about this stark metric for a second. There's been a nearly 20% drop in hiring for entry-level software developers, ages 22 to 25, since just 2024. Furthermore, employer surveys indicate that 1/3 of organizations actually expect AI to reduce their workforce in the coming year, particularly in areas like service operations and software engineering. So this transition is proving to be incredibly disruptive, even while corporate revenue tied to AI goes through the roof. Section 6, Competing in a Concentrated World. Let's head into our conclusion and see how all these pieces, the massive capital, the policy shifts, and the human element, fit together. As you digest this explainer today, I want to leave you with a real thought provoker. We've seen that the United States is leading the pack with monumental private capital, while agile nations like Singapore are building incredibly dense innovation hubs, and governments everywhere are throwing hundreds of billions at the wall to secure their footing. But in a world where capital and infrastructure are so heavily concentrated, how will your organization balance the raw power of funding with human talent and strategic agility? Because as those labor market numbers clearly showed us, having the best AI isn't just about the technology itself. It's about how we adapt our skills, our teams, and our strategies to thrive right alongside it. Thank you so much for joining me for this deep dive into the 2026 AI landscape. Keep learning, keep adapting, and I'll see you in the next explainer.